Before the weekly analysis begins, I just want to let you know that I do have a Patreon page. We have two tiers available. The first tier is called Start Off for £15 a month, and what you will receive is access to a Discord server containing the beginners, intermediate, and advanced course, risk management course for Elliot Wave trading, as well as financial literacy content. This tier is also for those who want to learn at their own pace and generally just support what I do and just join a community of like-minded traders. The second tier that I have is called the Waveologist for £35 a month, and what you receive is everything that I mentioned above with the addition of specific chart requests for me to annotate on a daily and weekly time frame, and one-to-one support or group sessions depending on how many people have subscribed to this tier. The group or one-to-one sessions are for those people who want a little bit of extra help with their Elliot Wave education, and also give the opportunity to ask me as many questions. Please do keep in mind that these are going to be 1 hour sessions depending on how many people have subscribed, and also I would say please do consider joining. It is really good value for money, and without further ado, let's get into the analysis. Alright guys, welcome back. This is going to be my Elliot Wave count for pound yen, pound dollar and gold. But first of all, any views or opinions that are expressed in this video do not constitute to trading or financial advice. So let's get started here straight away. We're starting off with pound yen. Here's my annotations. And obviously from what we've had in the market, I've clearly explained that we are currently in this sort of 1 2 3 4 5 wave impulsive move structure, and we're actually moving to the downside. However, this wave 4 seems to be a bit more complex. We do have a B and a C going in here, and then obviously I said last week that this was an A, and then this was an A, B and a C, and then we had another C wave here giving us an A, B, C. So this was actually giving us a running flat pattern to give us another 5 waves up. However, there's also this scenario that I have in play, which I genuinely believe is probably the right count. It's probably where we have an A, B, and a C here, that gives us our nice W, and then we have an A, B, C into an expanded flat, which gives us our wave X. And what we could expect is possibly another move to the upside, taking out obviously these highs again, like I said and I mentioned last week in my previous video. We should probably take out these highs before we then continue pushing back down to a downside to give us our 5th and final wave right here. So I would suggest that maybe in terms of this week, the buyers for this week, I'm definitely looking for the buyers. When we do look at it in terms of the sort of higher counts, you know, there has been some significant push coming in. At the same time, we have gotten some nice rejection coming back in, especially on the 4 hour. Especially we've got a pin bar right here, a double pin bar, even a pin bar that also engulfs the previous one. So there is sort of signs of bullish momentum coming back in, and hopefully you can take this to the upside, and that's probably going to be the bias for the week to come. On the hourly time frame, it does look like we're having a 1 2 3. Is this a wave 4? Then we're going to get one more push higher to give us a wave 5, and then we're going to see a 3-wave corrective structure coming back down to then give us our entry, you know, 50-60% of this entire wave to then look to take to the upside and hopefully gain some pips on this pair. So let's go on to Gbpusd. So here's my annotation for Gbpusd, and what I genuinely feel like is we're actually still in this sort of wave 4 correction. We have a nice 1 2 3 4 5 giving us a wave 1, and ABC into a running flat giving us a wave 2. Then we have 1 2 3 4, and then wave 5 of wave 3 ends in a nice ending diagonal structure. And we then have this market right here as a wave 4, where this is possibly moving as an ABC. Now whether this takes out the bottom here, this could be considered as a expanded flat, or it could also be considered as a running flat, depending on if we find some sort of significant rejection coming before it takes out these lows right here. I would suggest that obviously just wait for this pair to finish what it's doing, see what happens when it does come to in and around this level right here. if we do get a nice clear break, and where this could be considered as an impulsive structure and coming back down now to give us our sort of A B C sort of structure to bring this market to about 50-60% of this entire wave. And would that mean basically that wave 4 was here, wave 5 could be here, and we are currently seeing the sort of three wave structure coming back down of maybe 50 to 61.8% rejection of this entire wave, to then eventually continue going back to the upside if price action confirmation gives it. That is one possible scenario, that we could actually have that fifth wave in already. However, I'm going to say that I don't genuinely think so, especially when I go in and sort of dive into the count a little bit more deep on the lower time frame. I genuinely believe that we are still in this sort of wave 4 moving structure right here, and I'm just going to move kind of a bit more sideways now. At the same time, this could do a sort of few other things as well. We could actually still be in this move where the market is actually giving us a sort of W, then we could be in like a move like this, and then we come back down one more time, which basically means that wave 4 is just going to correct even more longer before they get one more push to the upside, giving us our fifth and final leg. But usually, when the market does move in sort of, 5 waves here, then a B, then 1, 2, 3, 4, and a 5. That's a nice A, B, C sort of structure right here coming in here. And we do have an A, B, and then we're currently in this sort of C wave, bringing us to the downside. I am assuming that we are going to take these lows. I would say the best way to trade it is wait for the sort of price action confirmation once these lows have been taken. And remember, your invalidation level is going to be the start of wave 1 or the extremes of wave 1, so in and around here. If the market does eventually sort of come towards these areas and take out, then I would suggest that this wave 5 was already in. And what that basically means is we are currently on this sort of 1, 2, 3, giving us an A or a W, then another B, and then here C, and then once we get a rejection from in and around these levels of 50-61.8% of this entire wave, we can then look to take it to the upside if price action confirms, of course. So that's GBP/USD. Let's go into gold. So gold, here's my annotations. I said from last week that I am going to stick to my original count, which I assumed that we got a wave 1 here, a wave 2, a wave 3, a nice wave 4 into a triangle, and a nice extended wave 5, giving us a wave 1 in a higher degree. Since last week there was non-farm payrolls, and that news release data made the US dollar stronger. We had US dollar strength last week, so that basically resulted in gold coming down, and that's what we started to see here. It's not necessarily saying that we're going to continue going to the downside, but I do assume that this is going to be a sort of a 3-wave corrective structure on ABC, giving us a wave 2 before we then sort of continue going to the upside to give us our third and fourth leg. I genuinely believe maybe throughout this whole entire year we might eventually create some new highs, especially taking out 2022 highs and 2021 highs. But with that being said, overall I've had a good week of trading gold. It went exactly as I planned out. So we have obviously a nice 1, 2, 3. Is this going to be a 4 then a 5? If that's the case, that's a 1, 2, 3, 4, 5 impulsive structure. That'll give us our wave A. We're then going to wait for a 3-wave correction structure coming back up. 50-60%, 50-61.8% of rejection of this entire wave to then go down to give us a nice ABC, and that's going to be our wave 2. On the daily time frame, we are extremely bullish in terms of the overall structure. However, we could start to see some sort of selling momentum, even more selling momentum coming in, especially with the US dollar strengthening. And obviously on the daily time frame we do have a nice bearish engulfing candle, followed by another bearish engulfing candle, bearish impulsive candle coming down. So I'm going to assume that we are going to get some sort of correction coming back in. Now if this moves an ABC and we start to see this moving as a 5-wave impulse, so this could be a wave 1, a wave 2, a wave 3, or we get a wave 4 here, then a wave 5. This can be considered, like I said, as an A, or it could also be considered as a wave 1. And if this does become an overall impulse, then obviously the whole entire structure and the wave count is completely different, and I'll basically update you guys on that. But at the end of the day, we take it one wave at a time. We don't like to rush things. But yeah, so I think the overall bias for gold, I would say for this week, is probably going to look to the it's probably going to be to the downside. Maybe towards the end of the week we might get some buying pressure coming back in. But at the end of the day, I'm going to assume that we do have our wave one in a higher degree already in, and what we are currently expecting is this sort of wave two now to eventually complete as an ABC or a WXY. Usually in wave two, they are usually wave two usually fall or pans out as an ABC in most cases, but we just got to see how it plays. So I hope you guys do enjoy my video. Please do like, comment, share, and subscribe. I do have a Patreon, sorry. The link will be in the description down below, and that's for people that are interested in mentorship. And yeah, I'll see you guys until the next one.